Markets, shelves, price tags, total illusion. You believe inflation is supply and demand. You are incorrect. Every meal you consume, every fabric you wear, they are cogs in a behavioral harvest. You monitor the barrel price of oil. You see the numbers at the pump. That is the storefront. The actual operation executes in the dark. You assume global crises are accidents. They are not. They are engineered liquidity grabs, pre-coded into the architecture. You are not the client. You are the liquidity, awaiting extraction. We will examine this mechanism. Oil is no longer a physical liquid. It is a weaponized asset. Global physical oil production is 103 million barrels daily. The limits are absolute. This is a fraction of the equation. The reality resides in data centers. Chicago, New York, London. Paper oil. Billions of paper barrels trade daily. Physical delivery is under 5%. This phantom volume exceeds global consumption by 75 times. Daily trading outpaces physical reality, 10 to 1. Human traders do not dictate prices. Algorithms do. A regional shock hits the feed. Artificial intelligence reacts in milliseconds, before you even read the headline. Natural language processors analyze the panic. They pull the trigger. Herd bias activates. Critical support levels break. Stop-loss cascades initiate. Thousands of automated orders execute. Enter the liquidity mirage. A crisis narrative breaks. Algorithms drain the order blocks instantly. Prices escalate asymmetrically. In 2020, oil hit minus $37. Did the world run out of oil? No. The financial system swallowed physical reality. It created a black hole. Current inflated prices are the inverse reflection. The same structural asymmetry. Regional tensions escalate. Supply chains stretch. The Red Sea disruption is weaponized. Vessels reroute around the Cape of Good Hope. Transit times increase. The system blames this for your inflated bill. It is an illusion. The data confirms the deception. Rerouting entire corporate fleets increased operational costs by a mere 7.3%. Your extracted cost? Freight indices surged over 200%. Unexplained Red Sea surcharges materialized. This is not a fair pass-through. This is excuseflation. The crisis is a shield. It conceals margin expansion. We analyze energy corporate balance sheets. Production dropped. Profits surged by 110%. They engineer this through the crack spread, the refinery margin, the financial chasm between crude oil and gasoline. This margin was manipulated from $15 to $60 a barrel. There is no underlying cost shock. Windfall profits dominate. Unregulated corporate extraction. Costs decline. Shelf prices remain rigid. The architecture dictates a rocket and feathers effect. Prices rocket upward. They float down, like feathers. Your price sensitivity is paralyzed. Oligopolistic supply management operates flawlessly. In this seller's inflation operation, the crisis is merely camouflage. The system infiltrates deeper, cellular level. Oil is not just fuel. It is the invisible architecture of the economy. Naphtha leaves the refinery. The industrial chain reaction initiates. A choke point forms. The impact hits the agricultural sector instantly. Synthetic fertilizer. The absolute dependency of modern farming. Ammonia and urea require hydrocarbon derivatives. A strait faces closure risk. Fertilizer prices escalate in seconds. The farmer borrows through shadow credit networks to absorb the shock. Nitrogen application drops. Yields collapse. The primary pass-through effect occurs. Oil market speculation dictates the price of your bread. The extraction continues beyond the field. We observe packaging, polymer resins, plastic,